7%, 7% revenue and earnings. You're still expanding your business, and we've had a couple of numbers there on the increase in your loyalty cards and so on. So give us the picture that produced these numbers.
Look, I think overall it's a pretty tough trading environment. Middle-income consumers particularly are under pressure. We've chosen in those circumstances to invest some profit margin in offering our customers better value through more promotions. I think that's been the right thing to do in terms of the long-term health of the brand, because we've taken share in all of the key categories in which we trade. And at the same time, our other businesses, Musica, The Body Shop and our wholesale distribution business, UPD, have all produced very good results. So overall in these circumstances, I think you described it as steady then. I think we think it's solid, and it's certainly within the range that we anticipated.
Of course, David, you've mentioned that you've had to get be very reliant on promotional activity, and that to sustain sales volumes. Just how creative have you had to be over this period? Because a specific focus is paid to what's in your stable, something like Musica, where people say that's possibly a dying avenue to be pursuing aggressively moving forward.
Well, look, I think Musica delivered a profit increase of 36%. So if that's a dying animal, I think that we'd like to have more of those. And I think that's driven by three reasons. First of all, we've controlled our costs very tightly in Musica. Secondly, we have grown new areas such as technology and accessories. And I think third, reports of the demise of the CD are greatly exaggerated. It's still the most popular format in which people access music. Musica itself is a great brand and again has taken share in that market.
Gary?
Yeah, David. I just want to look a bit maybe at the UPD business. I think a lot bigger percentage of earnings coming from there. I think it was said you got 10 new agency contracts. Is there any? Can you give us any insight what's in the pipeline? Are there more agency contracts to come?
Yes, we will. Well, certainly we've got a full year to benefit from the 10 that we acquired during the course of last year. I would anticipate that we will take on another one during the course of this year. That's GSK. That's another major client for us. That will actually fill the existing capacity that we've got. So one of the plans that we are announcing this morning is a further investment in UPD to build additional distribution capacity to accommodate future growth. Certainly, I think the UPD business model of offering pharmaceutical manufacturers a one-stop shop of both distribution and wholesale is proving attractive, and I think UPD is going to show us sustained growth in the years to come.
David, there was an announcement in mid-year that your MD had resigned, Mike Harvey. He'd been with the company for 23 years. You said that you and he had agreed it was time for someone new to come and take the business forward as MD. No appointment yet. A company which thinks a lot about a market like this with a diverse business, and that's for the Clicks business in particular with growth. Any sign of an appointment there?
Look, the board's reviewing what the right organisational structure for Clicks going forward should be, and in the meantime I'm enjoying myself running the business.
As you've done before. I also wanted to ask you about the pharmacy area. Now, the pharmaceutical groups and pharmacies generally, interference by government in the market, for better or worse, but certainly no price inflation in some of those categories. How are you managing that?
Look, I mean, I think in most markets across the world, the healthcare is regulated. This country is no different. And in truth, I think the regulatory regime for healthcare in this market is overall a pretty fair one. As you say, there has been very little inflation this year. You see the faster growth of generic products, and that's actually right in terms of the medicine costs in general. So our focus has got to be on growing volume in that market, which we've done. So you see that we've increased our share of the retail pharmacy market to over 16% now.
Hebron, let's bring you into the conversation at this point. What's your view on a player like Clicks right now? We've heard that it's a company that's broadening its scope of appeal. Its loyalty programs are appearing well, and even in a category where the perception is we're looking at the demise of the CD, like we were talking about the demise of print a little earlier on, it's not actually the reality.
No, I think you're still okay with that in South Africa, but I think the trend will continue going forward, and you're probably going to have margins under pressure in that specific business over time. And I think most analysts feel that way as well about Clicks. But I think another question is if they can they actually expand into Africa? That would have been a nice question to ask.
David, well, let's put it to you at this point. I mean, is that something that's glaring on your radar screen now, the African investment opportunity?
Look, I think we're in a slightly different position in terms of where can we get growth. Our view is that we're still only about halfway to the market share that we should be able to take in the retail pharmacy market. We're still able to open stores here. We're opening stores at the rate of 20 to 30 a year in South Africa because we are increasingly a health-led business with the opportunity to take share in pharmacy. So that's our major focus, although I have to say in the last year we do have stores in Namibia, we do have stores in Swaziland, we've opened our first pharmacies in Swaziland in the last year, we've opened our first pharmacies in Botswana in the last year. So cautious expansion elsewhere, but our primary focus are the growth opportunities in South Africa itself.
David, I'm very aware of your loyalty program because every time I go to Clicks, they ask me if I've got a Clicks card, and I'm beginning to feel pressurized here. So clearly they're under instruction to do that, and you've grown that substantially. It is a tough retail sector, although Brian Cantor said it's not tough enough. You companies are making too much money. He said you should be more competitive. What's your view generally on the consumer? You use these devices to keep the loyalty, to get the spending up, get the people in the shops more. But generally the retail sector, people have said it's run hard. How much further can it run? Going beyond Clicks, going to the sector that you're in, what are the prospects?
Well, can I say, first of all, I'm disappointed we haven't convinced you to get a club card yet. You really would get better value if you had one. I think more broadly on the issue of the South African consumer, I think that frankly there isn't a great deal of good news. I think retail spending, consumer spending is going to continue to be constrained over the next year. So remaining competitive, growing volume is still going to be our focus, and that requires a careful balance between investing in better value for consumers while still containing costs very tightly. So my view of the next 12 months is it's pretty much going to be more of the same.
Our two analysts in the studio, I know David can't talk about his share price and whether people should invest in his company, but the value in this company to be had at the moment, it's an unusual model. It has a diverse range of interests. There is growth, but how much value has the market put on this, Gary?
We're looking at the share price as pretty full at the moment. I mean, looking at earnings, we were actually quite optimistic on earnings. I mean, we had a forecast of about, full year diluted headline earnings per share was up. We were looking at about 10.5. Came in, ahead of market expectations, but a little bit below ours. But then looking at it, I mean, if you work that back on about an 18 times PE, I think it's trading on about a 22. I mean, we're looking at sort of a price target of maybe 63. So I mean, trading at 57, it's not a lot in there. I think you're going to pick up real value, low 50s. That's where you're really should be looking to accumulate the stock. And then, of course, you've also got the worries about just the amount of foreign investment in the company, which is obviously forcing up the price of the shares. I mean, I think last told it was about 60% foreign held. So.
That's a hefty foreign, investor component in terms of, the interest that you've been able to generate in Clicks, David. I mean, it's a story that has been told across the retail sector. But on that foreign note, I mean, we know a while back there was a lot of speculation as to whether or not a UK retailer Boots may follow the route Walmart has taken up and, come through and pursue Clicks. Any signs of interest that have been emerging in terms of a possible acquirer coming to the fore?
Well, the straightforward answer to that question is no. I think on the broader question of foreign investment in the Clicks group, I think there's a very specific reason. If you look around the world, the drugstore model, and you mentioned Boots, but I could also mention Walgreens, CVS, and Shoppers Drug in Canada. The drugstore model is a proven business model around the world. And the Clicks group is uniquely positioned in South Africa as the market leader. I think foreign investors see the model elsewhere, see the strengths we have in this country, and that's why they've chosen to invest in us.
Gerbrand, is Clicks a target for Boots or any other kind of company? And secondly, They've done well for investors, and it's how much is left. If you had 1,000 Rand 10 years ago, you'd have 13,670 Rand now in Clicks.
No, look, they've done brilliant over the past few years. Well-managed company. I would say it's a bit expensive at this stage for a foreigner to come in, especially with all the strikes and negativity that was flying around our foreign direct investment into South Africa over the past month. So that would probably be a concern for them as well. And I think it probably lacks that extra growth opportunity to the rest of Africa. So that would probably not be too attractive for a foreigner, but certainly a well-run operation. No margin of safety on the price at the moment. So we also think retailers are a bit expensive. If you get 10% growth and you pay 20 PE, I think you can probably get better value elsewhere. But as a well-run operation, brilliant.
Well, let's hit pause on the conversation with you guys for now. Of course, David, always a pleasure. Thanks so much for having joined us on the show this morning. David Kneale is CEO of the Clicks Group.